Now, one of the direct consequences of everything that's playing out, both in West Asia as well as domestically, in terms of the increase in pricing in commodities, is that packaging stocks have come back into focus. And we're trying to understand that, of course, Q4 numbers as well for an AGI Greenpac. Let me bring on board Rajesh Khosla, who's CEO at AGI, to try and give us a perspective as to what's playing out. Rajesh, not visible on your numbers just about yet. Q4 numbers were fairly resilient. Margins, in fact, came in better on a YOY basis. Tell us what's playing out. Top line was slightly softer when I'm looking at it YOY.
The top line in the packaging industry, the glass industry, is directly proportional to the commodity prices and like soda ash prices and others. So as soon as these prices get softened, the top line becomes a little less, but more or less the margins are stable. The market demand is okay. So we hope that this is going to remain the same and the packaging industry will remain resilient, remain strong in the times to come.
Are you able to pass through the increase in costs at all?
To some extent, yes. And there is always a time lag when there is an increase in the cost and price is settled with the customers. So there is a time lag, but yes, this time the time lag is a little small, because everybody has understood the problem in the Asia region, in the Middle East region, and probably that is one of the reasons things have narrowed down and the cost has been passed on.
Rajesh, how are you planning your inventory at this point in time? My understanding is that industry has moved away from the 90-day inventory to 30 and in some cases even weekly inventory calculation basis because of the pricing which is happening. Are you also looking at that same kind of metrics where you are looking from a week to week rather than having a 90-day visibility?
Yes, that is right. But the inventory level, I cannot say that it has come down to the 30 days, but it has certainly drastically reduced one. If you are talking about the FG inventory part, basically because of the non-availability or less availability of the gas, so the production has come down a bit. I'm talking about the industry, not about the AGI Greenpac. So because of the less production, and still there is a good demand in the industry because people are a little panicky and they want to stock their input material, that is the packaging glass packaging material. So that is the reason the packaging inventory has come down with these industries like us, and now it is running somewhere around 40-45 days, something like that. And if the situation persists, it will come down further because the production is little less than the demand side.
How are you looking at the raw material prices? Because of PET, polypropylene, plastic, all these prices have almost doubled. Are you able to pass on most of the prices to your customers, or is it going with a lag?
On the glass side, it is a one-to-one negotiation, and on the plastic side, on the PET side, there is a clear formula where the customers, they provide you with the conversion plus your raw material. So whatever raw material increase is there, straight away that is straight away passed on to the customer, and it is added up in their price part.
And what kind of an impact will this in the interim have on your margin number, if you can give us a perspective? Because you're saying this time is different. This time customers have been more understanding, and therefore they've been absorbing the higher costs far more quickly. But it still means that there will still be a bit of a lag. So what's the kind of impact, maybe Q1 FY27, that you're penciling in?
We hope so that on the absolute term, we should be able to maintain our margins because the cost, whatever the cost has gone up, we have been able to discuss with the customer and pass on to the customer. Percentage-wise, certainly it may have little bit of impact because the overall cost structure has gone up. Overall, the impact is that the denominator has gone up, but otherwise the margin will remain the same, more or less the same, I can say like that, and will be able to maintain the margin on the absolute term basis.
And the revenue guidance, will you stick by or rather up it from that earlier 2,665 odd crore rupees of the previous fiscal?
Certainly the revenue part will certainly go up because there is an increase in the price part because of the increase in the commodity. So certainly to that extent, the impact will be there. But again, the margin part will more or less remain same on the absolute terms.
Can you also give us a sense of your investments into the new segment, the aluminium cans? Have you sourced the raw material for that, and by when do you see that going commercial?
We expect that in the H1, first half of 2027, so we expect that this facility will be commissioned and we will start coming out with the new product, aluminium cans. So aluminium can is a very is a segment which complements our existing business, that is the packaging business, particularly in the glass segment. So it complements well because the customers are same and the demand is on the similar level. It is in the beer segment, it is on the beverages segment and all. We expect that the can consumption in India is very low. It is less than 3 cans per capita consumption is there in India. Wherever if you go to USA, the can consumption is close to around 350 cans per year per person. And rest of the world falls in between 350 and the lower level. So we expect that India is going to grow with the economy growing up, with the GDP growing up, per capita growing up. So there is going to be a good demand on the can side. So we expect that on the first half of the next year it will be there. And we are putting up this facility in Uttar Pradesh, close to Agra. There is a place called Hathras. So we have a land there. We are developing a land and everything is progressing well on that part.
And do you have firm commitment from your existing clients for that for this product, or you will have to pitch this product to them at this point in time?
I think on the level 1 we have already been in discussion, deep discussion. Level 2 is that the people have already inclined, they have shown their inclination to buy from us, and I think so by the 3rd or 4th quarter of this year we will be able to block our capacities with our customers on the contractual basis.
Are there already clients or customers that you've tied up with? And if you could just give us some color, whether all of them are domestic or some perhaps international too?
Internationally, it's not a very viable proposition because already India is a deficit. So there is no chance that India is going to export the cans to the outside world. But yes, within the India, we have a tie-up with the beverage industry, we have a tie-up with the beer industry, and they have a long-term commitment, indicative commitment with us, and those commitments have to be transformed into the contractual commitments now soon with them. So as soon as we are approaching towards the end date of our production, and then probably I think all these indicative commitments will be transformed into the contractual commitments.
Will this translate into future revenues for you on an annualized basis once the commitments come in and you are contractually, you have tied up all the ends?
In fact, the total production capacity will be 1.3 billion cans on pallet. The capacity will be 1.6 billion cans, but on pallet it is 1.3 billion can. We expect that the total revenue, once it is stabilized, 100% capacity utilization is there, it can be anywhere between 1,300 crores to 1,500 crores on an annualized basis. So this is the revenue which can be added up through this new segment we are adding up.
And margins will be the same or better?
It all depends upon at that particular time. We hope so. We expect, we hope so, we aspire that the margin should remain same, and that is what we are looking forward.
And by when do you achieve this 100% capacity utilization? Because you're clearly saying there's a huge deficit.
Okay, I think so, because if we start, let's say, hopefully in the first half of the 27, it takes around 5 to 6 months time to stabilize very properly on all the aspects, and maybe by the end of 27-28, you will see the production capacity utilization going up from anywhere, inching close to 100% capacity utilization. We hope so.
Right. Rajesh, so good chatting with you today. Thank you so much for your time.
Thank you very much.
Okay, that's AGI Greenpac.